Bull versus bear. Stock battle.
This makes for great radio.
Twinkle Bell ending the stock battle would be less climactic. Okay, are you ready, Brennan?
Yeah. I'm ready.
Go.
Number one, Absolute has sticky revenue with annual recurring revenue of $202 million. Plus, it operates in one of the fastest growing industries, with Fortune Business Insights projecting a compound annual growth rate of 13% to 2029. The company has a solid runway of growth following the NetMotion acquisition and is looking to expand into Europe, the Middle East, and Africa. The company grew organically at 18% in the last quarter and has supplemented growth with acquisitions. Trading with an enterprise value to EBITDA multiple of 17 times, it's a quality name that can offer value over the next 3 to 5 years. Though the company has levered up, it has a net debt to adjusted EBITDA multiple of 4.3 times and an interest coverage ratio of 1.8 times, which should be sustainable. Plus, the dividend could always be reduced, adding a margin of safety for the debt. Number four, Absolute provides investors higher risk investors the option for some exposure to a Canadian technology cybersecurity stock that pays a dividend yield of 2.5%.
Okay,
I made it through that.
I don't know why this didn't ring louder, but
little stumbling.
That's all right. Thank you. So you ended right on time. You ended right on time.
Good.
Okay.
Yeah, with some stumbling. So
excellent. Yep. Okay. Brett, are you ready? I'm gonna have to get a better ringer next time. Okay.
I am ready.
Brett, go.
Absolute is an over-leveraged company hiding in its risk beyond reasonable return. The company has a massive debt-to-equity ratio of 35 times because it has been unable to produce income or running a deficit over the life of the company, and has now taken on massive debt of $278 million. Sure, it might have cash flow, but that's only because it receives cash up front for its services. Once new customers dry up, cash flow will drop dramatically, ultimately leading to problem servicing is significant interest payments. 2, the valuation is way too high. The company trades at a sky-high EV to adjusted EBITDA of 70 times, a price to adjusted earnings of 22 times. The earnings and adjusted EBITDA would need to rise dramatically to justify these valuations. You may say that acquisition of NetMotion will justify these valuations, but the problem is they overpaid. They paid $342 million. 68% of that was $234 million of goodwill, which is just accounting speak for overpaying. The industry of software security is highly competitive and constantly evolving. The company prides itself on being the first zero trust network access, but being first just makes an easier path for larger players to enter and push out over-leveraged companies.
Time.
That was a lot.
All right. In there.
That was a lot.
That was a lot. Yeah. Wow.
Thank
okay.
You.
Absolute Software. So as I said, a company that I have looked at myself several times in the past. So you both brought up some valid points. Sometimes you were both arguing, like when it came to the balance sheet, Brennan was saying that the balance sheet was okay. Brett was saying that the balance sheet was over leveraged, right? 18% organic growth on revenue. That's great, Brennan. You never mentioned anything about earnings growth or cash flow growth though. So, I did make note of that. But then again, neither did you, Brett, right? So is cash flow down? Is it up? Is it flat? Like, I don't know. A little history on this company. So Absolute Software, it used to be what we call a cash-rich business. So it had a huge net cash balance. This is one of the reasons why we were really interested in it, because we like these types of companies because they have the flexibility to go out and make these big acquisitions without taking on a lot of debt. So Absolute Software, they went out, they made the big acquisition, but they also took on a lot of debt, and their balance sheet afterwards just completely it completely changed, right? So now instead of being a net cash business, they're a high leverage business. I'm just going to come out right and say, like, that's one of the reasons why I don't like the company. It's a high leverage business, 4.3 times net debt to EBITDA. That's high, especially for a technology stock. Typically in this industry, we would want to see below 2, sometimes even net cash. 1.8 interest coverage. That's really low. That's low. I would consider that low even for a real estate investment trust. 35 times debt to equity. Now, that's extremely high. The only thing is that, like, equity is an accounting item. It doesn't necessarily reflect the true value of the assets, but that's extremely high. I don't mind the valuation of 22 times adjusted EPS if that organic growth is transferring into really strong earnings growth and cash flow growth on a per share basis. But last time I looked, it's not, and neither of you have really told me anything that's different. So I have to just assume that the company has kind of continued to underperform on that basis. Right away is when I'm looking at this company, the balance sheet just puts me off. So I'm going to give this one to Brett for his first win, his first victory.
What?
Yeah. Let's go. Let's hear it.
What?
Congratulations.
Finish him.
But you want to know what? So I do have to say that I didn't realize we were doing a battle until this morning. And I took a look at the company because Brennan had mentioned that he was taking the 4 position. And I saw what company he was taking the 4 position on. And I'm like, well, he must be up against Ryan. And Ryan has just duped him into taking like basically an unwinnable,
We flipped the coin.
An unwinnable fight here. Okay, well that's Well, I know it was Brett. Yeah, I
flipped the coin too.
Yeah.
Wasn't me. I wasn't really
well, you can't accuse Brennan. You can definitely not accuse Brennan of doing something underhanded to get the better position here, because I knew he had an extreme uphill battle. So it's a good one for Brett. Great victory. I will admit, though, you're kind of throwing a softball there. So,
may have been lost
still,
on the flip of the coin.
Props to you. Yeah.
Or one.
Yeah. This one, I would say it was pretty much lost in the flip of the coin with that balance sheet. And without either of you really getting into the earnings growth, I just don't see how Brennan could have.
Yeah, I just think the balance sheet is, me and Brett were talking before, and I think we both knew.
I do note on the company, cash flow from operating activities was up to 17 million from 7.3 in the last period. So some of those multiples that we're quoting there may come down if the company can continue to execute as it did in the last quarter. There's not one thing I can say. There's just not a lot of great tech in Canada. We'd love to have a few more great tech stories, and we're continuing to look for them. But, the breadth of technology companies is not there. And that's why one of the reasons why we look to the U.S. often for tech exposure in our portfolios. You just don't find it in Canada. And, when we review many companies, if it is a good company, it's either very, very expensive, or they're just, there's whale crap companies that are just at the bottom. And we're not saying absolute that. It's certainly probably somewhere in the middle.
No, it's a legitimate company. It just hasn't performed. I mean, I've been looking at it for years. I think that it's underperformed. If memory serves me, targets post acquisition. Maybe it's going to turn it around. I really hope it does, because we need more great technology stories in the Canadian markets.
Yeah.
But
and I think it'll be interesting watching it, pay down its debt moving forward. Let's see what it can do, But yeah, I agree with the conclusion. I definitely didn't deserve to win that.
No.
No.
Far from.
Yeah.
You deserve better, Brent.
Yeah, thanks.